Ma'am, we need you to step outside the vehicle.
I don't understand what this is about. I'm a Starbucks employee.
Well, you can play dumb in court.
That voice on the body cam footage belongs to Winnie T, regional manager for Starbucks, overseeing 23 locations across the New Jersey district. To her store managers, she was sharp and no nonsense. The kind of leader who could read a profit and loss report in 60 seconds flat. To the people above her at corporate, she was a rising star, someone being groomed for bigger things. To federal investigators, she was the person behind an $850,000 ghost supplier scheme that had quietly drained the company for nearly 4 years. By the time agents moved in, they had already recovered 147 fake invoices, 11 shell vendor accounts, and wire transfers routed through 3 different states. Every single one of those transactions traced back to one login. Her login. By the time that body cam footage ends, the 14-year career she built from the ground up will be finished. The house will be seized, and she will be sitting in a federal courtroom, listening to a judge explain exactly how she thought she would never get caught. To understand how this happened, you have to understand the system she was working inside. Starbucks runs over 16,000 company-owned locations across the United States alone. Each year, it processes roughly $2.4 billion in supply chain payments domestically. Regional managers sit right in the middle of that flow. They approve vendor relationships, sign off on maintenance contracts, and clear invoices for everything from broken refrigerators to equipment rentals. Their approval is treated as a trust checkpoint, not a full audit. Invoices under a certain dollar amount require only one signature. Vendors who are approved won't stay approved. The whole system was built for speed, and speed, by design, does not stop to ask extra questions. Nobody built that system expecting someone to spend over a decade quietly learning every place where it stopped looking. Before we go any further, if you are new here, this channel covers real cases like this every single week. Hit subscribe so you do not miss the next one. Now let's go back to where this all started. Winnie Barnard did not grow up poor, but she grew up watching money matter. She was raised in a working-class household in a mid-sized city where her father spent decades inside the kind of job most people overlook: logistics, paperwork, municipal systems. He tracked shipments, filed reports, moved things from one column to another. It was not glamorous work, but it was precise, and he was good at it. Winnie watched him closely. From a young age, she had a mind that liked order. Not in the way some kids enjoy organizing their bedroom. In a deeper way, the kind that notices when numbers don't line up, when a process skips a step, when something that should be tracked isn't. By the time she was in middle school, she was the student teachers quietly relied on to double-check things. She was not loud about it. She just saw details that other people walked past. In high school, she ran the annual fundraiser for her class. It was supposed to be a simple job: collect money, log it, hand it over. But partway through, she found an error in the record sheet that 2 adult sponsors had already signed off on. She flagged it, fixed it, and said nothing more about it. The adults were embarrassed. Winnie moved on. That was the pattern with her. She noticed things, corrected them, and kept going. At 16, she took a part-time job at a retail store. Most teenagers at that age are focused on the paycheck and the hours. Winnie was watching something else. She noticed how inventory was counted and how managers could override item codes in the system with almost no follow-up. She noticed which receipts got filed and which ones sat in a pile and eventually disappeared. She saw how a return could be processed one way on paper and a slightly different way in the register, and how no one flagged the gap. She was not thinking about how to steal. She was thinking about how the whole thing worked, what held it together and what didn't. That is the part that matters. There was no criminal plan forming in the back of her mind. She was not a teenager plotting her future. She was just a girl with a sharp eye and an instinct for understanding systems, how they moved, where they trusted people without checking, and where that trust had a limit. She didn't have a plan at 17. She just had a gift for seeing the machine behind the counter. Winnie Barnard walked into her first Starbucks shift in her mid-20s with nothing unusual on her resume. She was a shift supervisor, the person who keeps the line moving, manages the floor during the rush, and makes sure the store closes clean. It is not a glamorous role. Most people who start there stay there for a year or 2 and move on. Winnie did not move on. She moved up. Within 3 years, she was a store manager. That alone was not remarkable. Starbucks promotes from within regularly, and strong performers climb quickly. What made Winnie stand out was what her supervisors kept writing in her reviews. It was not about customer satisfaction scores or speed of service. It was something more specific. She had a way with the operational side of the business that her peers simply did not match. She understood vendor coordination. She caught cost overruns before they showed up in the monthly report. She kept her compliance numbers clean in a way that made regional oversight easy. One performance review, paraphrased by investigators years later, noted that she had an unusually precise grasp of the supplier approval process. At the time, that line was a compliment. It was the kind of detail that gets highlighted in green and used to justify a promotion. Nobody reading it then could have known it was also a roadmap. She was promoted to district manager, overseeing a handful of locations. She performed well there too, steady, consistent, no drama. Then came the promotion that changed everything. Regional manager, 23 locations across the New Jersey district, and with that title came a set of responsibilities that, together, formed something that would later interest federal investigators enormously. As regional manager, Winnie now had the authority to approve vendor relationships across all of her locations. She could sign off on invoices up to $15,000 without a second person reviewing them. She had direct working relationships with the accounts payable processors who moved money through the system. In the structure of a company as large as Starbucks, that combination of authorities was not unusual for her level. It was how the system was designed. Regional managers were trusted to manage their regions. That was the whole point. But for someone who had spent years quietly studying how institutional systems worked, where the checkpoints were, how approvals moved, and where a second set of eyes never appeared, that promotion was something else entirely. She now had the keys to a system that trusted her completely, and she had been studying that system for years. To understand how Winnie Barnard stole $850,000 from one of the largest coffee companies in the world, you have to understand how Starbucks brings a new vendor into its system, because that is exactly where she started. When a supplier wants to do business with Starbucks at the regional level, they go through a credentialing process. They submit a business license, a W-9 tax form, and their banking information for direct payment. A regional manager reviews the submission and signs off. Once that approval goes through, the vendor is live in the system. Future invoices from that vendor move through accounts payable automatically, as long as the amounts stay below the threshold that triggers a secondary review. Above a certain number, a second set of eyes gets involved. Below it, the invoice clears and the payment goes out. Winnie knew this process better than almost anyone. She had worked inside it for years. She knew what a clean vendor submission looked like. She knew the threshold that kept invoices from being flagged, and she knew that once a vendor was trusted, the system extended that trust automatically on every invoice that followed. So she built a vendor. The first shell company she created was registered as an equipment maintenance business. It had a real LLC filing, the kind you can pull up in a state database. It had a real bank account opened in the business name. What it did not have was any actual operations, any employees, or any equipment. It existed entirely on paper, and the paper was clean. She submitted the first invoice through that vendor for $11,400, billing Starbucks for refrigeration servicing across 3 locations. The work was never done. The invoice cleared in 9 days. That was the moment she knew the architecture held. Over the next 28 months, she did not get greedy in the way most people imagine fraud works. She did not submit massive invoices or move fast. She built 4 additional shell vendor identities, each with its own registration and banking trail. She spaced the invoices carefully, keeping amounts beneath the levels that would trigger closer review. She rotated the billing language, swapping out descriptions like refrigeration servicing for equipment calibration, maintenance contracts, facility inspections, so that no single phrase appeared often enough to draw attention. Each invoice looked routine. Each one looked like the ordinary cost of running 23 busy locations. There was no panic in the way she built this. No shortcuts, no sloppy moves. She treated it the same way she had always treated operational problems, methodically, patiently, and with a clear understanding of how the system around her worked. It wasn't reckless. It was a process, and that made it far more dangerous. The first invoice clearing in 9 days told Winnie everything she needed to know. The system was not going to stop her, so she stopped holding back. What began as a careful test with an $11,400 submission grew steadily over the following months. By the second year of the scheme, she was drawing between $40,000 and $60,000 every single month through her network of shell vendors. The invoices kept coming, spaced out, rotated, buried inside the normal flow of regional operating costs. To anyone processing payments at the accounts payable level, it looked like the routine expense of maintaining 24 busy locations. Nobody was connecting the dots because the dots had been deliberately placed far apart. But moving that much money required help. At some point in the operation, Winnie brought in someone she trusted, a former colleague, believed by investigators to be a close personal contact, possibly an ex-boyfriend. His job was straightforward. He managed the bank accounts tied to the Shell LLCs, handled withdrawals, and moved funds when needed. In exchange, he received a flat cut of whatever came through. He was not the architect. He was the infrastructure. And for a long time, that arrangement worked exactly as she designed it. The money had to go somewhere, and it did. In 2022, she purchased a Mercedes GLE in a cash deal worth $67,000. She put significant money into renovating a lake property she had owned for several years. New finishes, upgraded fixtures, the kind of work that neighbors notice. Her social media presence during this period showed a designer wardrobe that expanded quietly but consistently. Her travel pattern changed too. Longer trips, nicer hotels, destinations that raised eyebrows among co-workers who noticed but said nothing because she was their boss and she had an easy answer ready. She always said she was good with investments. Nobody pushed back. That was the social cover that kept everything quiet. Her authority in the room made the questions feel inappropriate before they were even asked. Then came the moment that best captures just how comfortable she had become. She approved a $48,000 invoice for multi-site equipment audit services, work that the invoice claimed was performed across multiple locations over a holiday weekend. Every single one of those locations was closed that weekend. The invoice cleared anyway. If this is your first time on this channel, that subscribe button is right below. We post cases like this every week. Because what happens next is where the whole thing begins to unravel, and it starts in the one place Winnie never thought to watch. It did not end with a dramatic tip or a whistleblower. It ended with a new hire doing her job. A junior accounts payable analyst, brought on as part of a routine vendor consolidation review, was working through regional supplier records when something stopped her. One vendor had submitted 34 invoices across 18 months, a steady, consistent billing history that added up to a significant sum. But when she went looking for the standard supporting records, they were not there. The vendor did not appear in any service logs across the locations it claimed to have worked. Its listed physical address did not match any verifiable location. There was no digital footprint that placed this company anywhere near an actual Starbucks site. She flagged it. That flag moved up the chain faster than Winnie could have anticipated. Within 2 weeks, Starbucks' internal audit team had pulled the thread far enough to know they needed outside help. Forensic accountants came in, and what they found in the weeks that followed took the case from an internal concern to a federal matter. All 5 Shell vendors that had been billing through Winnie's region shared something they should never have shared: overlapping IP addresses on the documents they had submitted during the credentialing process. 3 of the 5 shared the same fax number. On the surface, each vendor had looked independent. Underneath, they were all connected by the same small set of digital fingerprints. The FBI's Financial Crimes Unit and IRS Criminal Investigation joined the case shortly after. Now it was not just a billing irregularity. It was wire fraud, tax evasion, and a federal investigation with subpoena power. The smoking gun came from the invoice files themselves. Forensic examiners pulled the metadata embedded in the documents, the hidden information that every digital file carries, recording when it was created, on what device, and under what credentials. Every single fraudulent invoice had been created on her work laptop, logged under her credentials, at timestamps that placed her as the only person in the room. There was no ambiguity. The documents did not point toward her. They were hers. By this point, the net was closing from multiple directions. And then Winnie Barnard resigned. She submitted her notice citing personal reasons, gave the standard notice period, and walked out. Investigators believe she had picked up on the audit activity, but did not yet understand how far it had already gone. She thought she was stepping away before the spotlight reached her. She walked out of that office thinking she'd outrun it. She hadn't. Federal agents do not come at noon. They come early, before the day has a chance to start, before phones get checked and systems get accessed, and people have time to think. They were in her driveway before the neighborhood was fully awake. Winnie Barnard stepped out of her front door in workout clothes, a coffee in her hand, and walked straight into the kind of morning that does not exist in any version of the future she had planned. The timing was not accidental. Investigators had deliberately moved before she could reach any work system, delete any file, or make any call that mattered. By the time she saw the agents, the window for any of that was already closed. Her first response was denial. There had been a mistake, she told them. She was calm about it, measured, the same composure she had carried through 14 years of performance reviews and regional audits. Then came deflection. They needed to speak with her attorney. She knew enough to say that much. She held herself together, and for a few moments she looked like someone who believed she still had a path through this. Then one of the agents began reading back invoice dates and amounts. Specific ones. 34 of them. He read the vendor names, the service descriptions, the exact dollar figures, and the timestamps. He did not rush. He did not raise his voice. He just read the list. Her composure broke quietly. Not with tears or shouting, with stillness. The kind that comes when a person realizes that the other side of the table knows more than they were supposed to know, and that there is no version of this conversation that ends well. The neighbors came to their doorways. There was no scene to watch, no struggle, no raised voices, no dramatic moment to describe later. Just a woman in workout clothes setting down her coffee and being walked to a federal vehicle while the street stood silent around her. That quiet made it worse, somehow. Loud endings have somewhere to put the feeling. This one didn't. Inside the house, agents moved through every room. They left with her personal laptop, 2 mobile phones, boxes of financial records, and the keys to the Mercedes GLE she had purchased in cash 2 years earlier. That car had been bought with money that belonged to Starbucks. Now it was evidence. Everything she had bought with 4 years of invisible theft was now inventory on a federal seizure list. Winnie Barnard did not go to trial. Faced with invoice metadata, shell company registrations, wire transfer records, and a co-conspirator who had already agreed to cooperate with prosecutors, she pleaded guilty to wire fraud and money laundering. There was no version of a courtroom fight that made sense against that volume of evidence, and her attorneys knew it. The judge's statement at sentencing did not focus on the dollar amount, though $850,000 is not a small number. It focused on something harder to put a price on. He told her directly that she had exploited a system built on institutional trust, and that she had done so deliberately, methodically, and repeatedly. Not once in a moment of desperation. Not as a one-time mistake that grew beyond her control. She had built a structure, maintained it across 4 years, and made calculated decisions every step of the way. She was sentenced to federal prison, ordered to pay $850,000 in full restitution, and required to forfeit both the Mercedes and the lake property. The co-conspirator who had managed the Shell LLC bank accounts received a lighter sentence in exchange for his cooperation with investigators. He gave them everything they needed to close the remaining gaps in the case. Starbucks moved quickly after the conviction. The company introduced mandatory dual approval on all vendor invoices above $5,000, meaning no single regional manager could clear a payment alone above that threshold. They also launched a new credentialing audit cycle, requiring periodic re-verification of active vendors rather than treating initial approval as permanent. The blind spot she had spent years learning how to use was finally being covered. And then there is the person who actually found it. The analyst who flagged the first suspicious vendor was 28 years old and 3 months into her role when she ran that consolidation report. 6 months before she was hired, the company had nearly eliminated her entire department in a cost-cutting round. The team was kept. She was brought on. And on an otherwise routine afternoon, doing work that most people would have processed without a second thought, she noticed that something did not add up. She was not a senior investigator. She was not running a fraud detection program. She was just doing her job carefully. The system was never broken. It was just built on an assumption that the person holding the keys deserved them. That assumption cost $850,000 and 4 years before anyone asked why.